What's up, outliers? Happy Saturday. Today, we're going to focus on GameStop. There is a couple corporate actions that have happened recently that I think are worth at least taking a little time, looking through together, seeing what we see, and learning a little bit about some of these corporate activities. That's a little bit more of the main pieces that I want to lean into for the session today, because GameStop and what GameStop is doing is very interesting. There's no doubt on how active Cohen is, because not only is there a lot going on with the business itself, the different things that the business is trying to do to reinvent itself, which I will be completely straightforward. I do not know all of those things. I know that it got into card grading, and then I know that it was, I think, starting to sell Legos, if I'm not mistaken. And then I think that there's some more Pokemon stuff that's been a bigger deal, but I'm not like super well read in beyond that. But that still takes time, effort, energy to do all of that. And then after that, they started going through a couple different, very, very, very different, but multiple avenues to position themselves to do different things, specifically tap into capital markets via probably debt in some way, I would expect, but we'll see. We really don't know. So we already know about the warrants, and I think most folks are pretty well read on what the warrants are, how they operate, different scenarios with respect to the options chain, how they're going to adjust, and so on and so forth. So the way that I view the warrants is kind of designed to stimulate retail. That's really what I see from it. There's a lot of different ways that GameStop could do what they wanted to do with the end result of what can happen with the warrants. But by pricing it as high as they did, up at 32, in order for them to be profitable, it leads to a couple different scenarios. But it's not like it's something that's immediately dilutive. It's not. And it's not like it's something that's immediately going to cause some sort of massive change in value. It's also not. Because in order for people to logically exercise their warrants and buy their shares, you really do need the stock above 32. Looking back over its track record, it's not spent a bunch of time above 32. So if I just hover my mouse, that orange horizontal line, we can see that it cracked above back in May for 1, 2, 3, 4, 5, 6 days between May and June. 6 days between May and June above that handle. Then in November, December, that's May of last year, by the way. Then November, December, January, it looks like there's probably maybe 5 days that it hovered above the 32 handle. And then as of May and June of this year, there looks like 3 days that we saw it above the 32 handle. So the stock itself just doesn't spend a lot of time right now above the 32 handle. It just is what it is. It's not like a controversial statement. It, again, is what it is. So that leads to another really interesting series of impacts from the warrants. One of the more interesting impacts that the retail community has done a good job honing in on is, what does this do for naked shorts? Because if we have a broker and I am person A over here and I hold shares of GameStop and I opt into my broker, I say, yes, short my shares, sell them out if people want to use them to short, because then I receive some money for doing that. So then the broker says, okay, we'll add this to our inventory. And then when person B over here says, I want to short GameStop, they will borrow the shares from the broker. They're going to pay them a yield in order to do this. The broker will pay you part of that yield to thank you and to compensate you for lending your shares. Providing liquidity is what that is. And then this person does what they want. So in this kind of scenario, a more normal scenario, as these warrants come out, the warrant enters the ecosystem here because the broker is the person that's brokering all of these transactions between both parties. So it's not such that it's going to go to this person and then this person has to give it to this person. Theoretically, that's the broader concept that we're talking about, but in a functional perspective, this isn't how it goes. It's going to go, the warrants essentially going to funnel to the broker because they're the record holder, technically, for people that don't direct register their shares. And they're just going to say, okay, this person gets the warrant. This person doesn't because they're shorting the shares. There's nothing here. So in the scenario that we're referring to here, where there's a pretty clear line and the broker is the quote unquote middleman, pretty simple. This gets interesting when we look at naked shorts. The way a naked short exists is rather than this person, the naked short person, being tied to a counterparty, they're tied to nothing. They're tied to fucking pixie dust. They're tied to nothing. They're tied to air. They're tied to locates. They're tied to stuff that doesn't fucking exist. So that creates a potentially very interesting scenario. Now, the reason why I'm not convinced that this scenario might go quite as haywire as people are hoping, which I'm the first one I would love to see it, just because I think it would be like literally watching fireworks. But I don't see that being exceedingly highly probable because there's a couple ways out for anybody in this scenario. The way that goes is right now, what is it, 59 million? Is that right? Fact check me. Let me know if I need to change the number. I think it's like 59 million warrants that were granted. So if there's 59 million recorded shareholders, we hit this level. There is a scenario where it's not just a function of the shareholders, because remember, there's also options. And these options also grant access to the warrants if exercised and if they're held by the record date. That's an important piece of the puzzle because theoretically, if there are, I don't know what the breakdown of shares is right now. Let me take a quick look at what the DRS numbers look like. I have a little tracker that I use. Was it 15% about? So there's about 15%. Let me grab the current shares outstanding and a little notepad just so that we could do a little back of the napkin math together. All right. So here's what I see. Let me find a blank space. I see 447, 666, 484. So this is what I see total shares outstanding right now. And if I guess at a few numbers, so if I guess DRS, and again, tell me if these are like wildly off, I'm just guessing. We have to look at DRS, we have to look at insiders, we have to look at institutional holdership. We have to look at brokers. to just get a sense of what exists. DRS, as I said, I think it's like 15% or so. I'll copy this format. So DRS right out of the gate, 67 million, if that's correct. Right? Like, if we're offering 59 milli and there's 67 million DRS'd, right from the jump, we already do not have enough warrants for everybody to get actual shares. So there doesn't need to be. That's not anything that's guaranteed. There's an out that's baked into this. The out is also a potential cash value. The out can also be a future locate, which would be bullshit, but it is an out. There are different mechanisms without going through the direct warrant process that you can give somebody a synthetic warrant. For example, if the stock is above 32 or whatever, a broker can give you the current cash value for that warrant. And then at that point, you can just buy the shares at spot price, which covers the delta because of the value of whatever the warrant is there. So there are outs baked into this. My expectation is that there's going to be a certain number of that occurs if, and it's a big if, GameStop is firmly above the 32 handle. I think in order for GameStop, well, let's actually see. I'm actually super curious. I don't know what the current number is. So GameStop right now is 25.38. So with GameStop at 25.38, assuming no additional shares or capital raising, what would its PS need to be roughly? Around 32. See what that gives us. So this scenario that I'm highlighting is just to talk about the warrants, the potential squeeze that people think might exist in the warrants. I think, unfortunately, the probability for some sort of magnificent squeeze to occur here is quite low. It's directly due to these outs that are baked in. We can already see there's not even enough warrants provided for the DRS shareholders, let alone for more shareholders to choose to exercise if they were so inclined. So that means there's likely to be a bunch of nonsense that will end up following through. Yeah. Hot Nitrogen says it's one warrant for every 10 shares. Yeah, that's my point. That there's nowhere near enough warrants that are offered right now to cover essentially everything. Because once you go through the rest of these numbers, right? So again, we're saying it's 10-1. 44.7 million, 59, because then there's also the bonds, right? What is the bonds? Okay, 14 million go to bonds. So there's 59 million. 59 milli. 14 go to bonds. That leaves 45 for the rest. So there is enough, clearly, for the DRS shares. There's still not enough for everybody. Because it's the same scenario. This is not looking at a single options position. So this is allowing everybody that's currently recorded to be able to access a share. Yes. It's not allowing for any meaningful number of options holders to exercise. There's a long window that GME1 will exist. What is it, about a year or so? It's a lot of potential options to exercise. Let's take a look at the calls. Just out of sheer curiosity, the call open interest is 774,397. Each one of these calls represents 100 shares. In call options right now, there's 77,439,700 share equivalents here. If I tie these numbers together, not even the full number, right? It's not even, if we think about which of these options holders would exercise to take the warrants, who knows, right? I'm just using a general starting point for the conversation. That puts us not even in the ballpark. So if we look at what warrants would be required here, for this bucket alone, you would need 7.7 million. So that puts us well over what is actually allocated at the moment. So I think this, again, just tips the hand. And again, just to be super clear, there's no world where all of these calls would exercise, right? That's not a realistic assumption. It would be some subset of these, but there's also a reality that that number itself will fluctuate a lot because calls can be created out of thin air. They're not tied to anything. So it makes it an interesting scenario because there are already mechanisms in place to circumnavigate this and the liquidity crunch, which again is a cash value. That's very standard to get a cash value for the warrant. If the warrants are trading at $35 if the stock is trading at $35 and the warrant is trading at whatever it's trading at that point, including the $3 of intrinsic value, you can literally just provide the current cash amount for that warrant, and then the holder could just buy spot price, which would give them an effective basis of 32 once you include the intrinsic value. So there's already a route through here. There is a really good chance that it will still cause some friction, I imagine, because this is going to put a pretty big spotlight on the plumbing issue. I'm excited to see what that looks like. I think the overall impact to the short side of the equation and like pressuring the shorts might not be as significant as people are hoping for, but I still don't think that's a bad thing because there's still going to be a lot of questions around the plumbing where people are expecting to see warrants and the ability to leverage these warrants, but they're not going to see them. And that's going to raise some questions, which I'm quite interested in. So we will definitely see how that behaves. This doesn't even take into account the entire world where for each of these long calls, there's a short equivalent. Now, again, it still is that same broker pass-through methodology I explained earlier. So if you're like short a call in GameStop, it's not like you are going to see the warrant and then you have to hand the warrant over to somebody else. The broker is going to coordinate literally all of that. So there won't be a whole lot to be done. All things equal here, I think no matter what, we're going to see a pretty interesting initial price activity when the stock starts trading around 32. That's the other problem set, is that without the stock near 32, literally all of this is moot. None of this matters because nobody will exercise. It makes no financial sense to exercise if it's sub 32. So that's really the first threshold that the stock has to get to before things really start to heat up in a significant way, which again, I'm pretty excited to see what that could look like, because there's a good potential that there will at least be some news coverage on some of the plumbing issues with GameStop, which would be cool. The other thing that I wanted to talk about was the shelf, the S3. This. So this is actually a really common move that large companies will make. Effectively, what this does is provide a methodology to quickly access capital markets. The way it does this is the S3 is essentially just cutting down the review cycle for them to conduct different corporate activities. So this allows for them to interact with debt, issue, to buy. They can do a lot of different things given this. This is just a way to essentially, it's kind of like setting up a wire account for a bank that you have, right? So if you have a bank and then you have another account that you regularly wire money to, you can link those accounts so that you can more easily send money back and forth because you might do it a lot for whatever reason. It's kind of like the same thing, but different context here. So this is just GameStop saying, we clearly have intent to do something. That's why you do this. As always, what they choose to do wholly remains to be seen. That's the biggest question I think most of us have, and rightfully so. Literally nobody knows. But it gives them at least the ability to, they can offer more shares. They can move into an acquisition. Potentially, that's one of the routes that I think the route of an acquisition would make a lot of sense for them, because they've been going down that path for a little while. They've accumulated a lot of cash. One of the reasons why you accumulate that much cash is if you are trying to use it for something. Building a significant cash position it just doesn't make a lot of sense. So in that scenario, I am just absolutely fascinated by what they're thinking of doing, because it does seem like they have their eyes on something. What they're looking at, I really don't know. I really have absolutely no idea. But I'm super, super curious what it might be. So I think this is just progressing them along that path, because it positions them to be able to take advantage of things as they emerge. Whereas in other instances, it could take a while to complete their filings. And in trying to complete those filings, the conditions for a deal can change, and then they can find themselves in a suboptimal position compared to, what they're trying to do. So that part, pretty bullish in terms of them starting to tip their hand a little bit. that they're looking at something. Not super bullish in terms of having any idea what it is that they're looking at, because that, unfortunately, we really just have absolutely no idea. But I think it's something, but absolutely no clue what. I've spent a while actually trying to think about that and see like what route they might be trying to go, and if there's something that would like very smoothly fit into the business. That's one of the things that's super interesting is I'm at least looking at the scenario from like they're probably either going to go like one or two polar different directions. One of those polar directions is they're going to make a massive pivot and it'll just be in a completely different industry, everything completely different. That's one route. The other route is a less massive pivot and looking at some sort of opportunity that more directly fits with the business. But this allows for speed to do that. That's the main thing that this provides, whichever those paths they end up going. Coffee says, any ideas what companies GameStop might buy? It really is one of the more fascinating things to speculate on. I really enjoy speculating on that because I could see them going a bunch of different ways. I've heard conversations about them getting into like the gaming industry and like hosting different kind of like gaming events. Man, like, would that not be ideal? That would just be perfect for them. And that's something that they could fit into the business no matter what. That to me just seems like shocking that they don't do that current state. So that's one idea. Anything with collectibles, I think makes a whole lot of sense. Then there is the ability to pivot like super hard into other things, digital collectibles. I know that the whole metaverse kind of died off, but there might be some opportunities and stuff like that from a tech perspective. I think that there's opportunities to find and leverage blockchain technology for collectibles, like all that kind of stuff, I think is well within the wheelhouse. That doesn't even start getting into the world of AI and different ways that AI might be able to be integrated into the business, which I imagine is also a pretty significant potential. But it is so difficult to see which way they might go. And they really do not give a lot of hints. Even this, it's just a hint that they're looking at being able to do something when they want quickly. Like that's really what this is. Beyond that, absolutely no idea. No clue. We do know that they have cash. That's the other fascinating thing here, is because not only do they have like a little bit of cash, they have a decent amount of cash. Them having as much cash as they have by itself is fascinating, because you normally don't over raise. So, and more often than not, they're not necessarily going to get something all cash either. More often than not, you'll get something that's partially cash, partially debt that you take on from the purchasing transaction. So with that, like, I'm just absolutely confounded what route they might choose to go. But they have a bunch of them that they can go. But we will soon see, hopefully, because I do think that it's getting closer to them actually pulling the trigger on it. It's the only reason, again, why you start doing stuff like this is because you're getting closer to the point where you want to be ready to make a transaction. So yeah, I expect to see something, but very tough to know when or what that might look like. Shriek says, do you think RC sees a market downturn coming? Not necessarily. Like, I don't really see any indication of that. Zooming out to general trader style stuff, Traders are notorious for this, by the way, and investors, as soon as the market starts to get near highs, people immediately start looking for the crash, right? Everybody's like, oh, it's going to crash. Everything's going to fall. There's going to be a drop. I'm waiting for the dip. And all these common fears emerge through the woodwork. I've spent a lot of time, especially researching market behavior around different price levels. We did a pretty in-depth series actually for one of the skill development streams, like a few months ago, where we looked at the frequency that the market remains within certain levels of all-time highs. The overwhelming majority of occurrences, the market is within 5% of all-time highs. Overwhelming majority. So the market spends most of its time there. That just is what it is. People start to get really nervy whenever it's there. And the other thing to keep in mind is standard media stuff. For example, if I were to change the title to this live stream, instead of saying GameStop, S-3ASR shelf registration and warrant analysis, that's like a terrible title for YouTube. That's never going to do well. But it's what we're talking about, and I still refuse to sell out and do the bullshit. But if I wanted to make this title click and the stream blow up, I instead would put something like GameStop just made the biggest mistake of its career or some shit like that, right? Like it's those kinds of doom and gloom titles that will always get more engagement. And the reason is because that fear that drives people is significant. So taking this back to the example when we're near market highs, the reason why you're going to see all of that stuff is because people fear the drop. They're scared of the downside. So anytime you hear somebody come on that says, oh, the market's due for a correction, in the broader context of things, a correction, something that's like 10%, who gives a fuck if something drops 10%? Right? Like it's 10%, dog. It's not a big deal. But people have been so primed to be absolutely like hypersensitive to any sort of down move. There's a really common saying that's super important, which is way more money is lost in anticipation of crashes than in crashes themselves. I do believe that to be true. During crashes, if you're holding assets that you still like, that you still think are really strong, that are going to be able to emerge through difficulty, in those instances, you buy hand over fucking fist. You click until your fingers bleed because you're getting everything at an insane value compared to what it might be. A great example of this is levered ETFs. Levered ETFs are dangerous for a lot of reasons. The primary reason is volatility. This is a move where TQQs went from 93 down to 40. People that got caught in this drop would feel some sort of pain. So let's say you got in at $93 and the current price, let's say that you had $100,000. You were able to purchase 1,075 shares. That's what you have at that point. Your notional value, because TQQs is 3 times levered, realistically is this. We have to apply a 3 times leverage factor. So your capital really looks like this. Let's say instead, TQQs drops to that 40 handle like we just looked at. You still have your 1,000 shares. The value of that position is now 43. Your P&L is down 56 grand. Of your investment, you're down 57%. An interesting scenario instead of doing this is, let's instead say you bought $75,000 worth. During that drop, you had another $25,000 you can use. So you take that $25,000 and you buy another 625 shares. Notice something out of the gate. Notice how you were able to get 806 shares for 75,000. With just 25,000, 1/3, you're able to get over half, 2/3 of your shares that you bought, over 2/3 of your shares. This is, you guys have heard me refer to this before. This is the concept of units. So your total position, your aggregate position now is this plus this. Your aggregate cost is this plus this. Your effective value per share you had one tranche that you got in at 40, one tranche at 93. The main thing that I want you to take away is that, like, these drops aren't necessarily as scary as people think. That's really the main message. So here we had 806 shares, and then here we had 625. So over the course of this drop, if you just bought in towards the bottom, wherever you thought the bottom was, or on the way down, or even as it continues to go, if instead of using all of your money up front, you scale down your investment ever so slightly, you can meaningfully change the basis of your position. Meaningfully change the basis of your position. You can take the overall pain down significantly if you learn that during these kinds of moves, there are opportunities. Now, a levered ETF is really an extreme example of this because they have leverage. If we look at something like that in GameStop, GameStop really hasn't had much of a downtick in some time. The lowest it got was kind of this 20.5 handle, and it's not been below that. So GameStop has been quite resilient. It's been trending sideways for some time. It absolutely struggles to break above really like this 31.5 handle. It does not spend much time at all above that 31.5 handle. But I don't inherently think that that's the end of the world. Like, that's not the worst thing ever. It just means that the value of the company isn't quite where it needs to be yet. In order for this thing to be valued at like $32, we would need to see like a 25% increase or so in their earnings per share-ish, which is doable with the way that they're pivoting. It's just a function of how long does it take and how does that impact the rest of the profile via the warrants and whatnot. So the last thing that I want to mention there, just to bring all of that home, don't listen to the noise when people are saying stuff like, oh, there's a crash, oh, there's a pullback due, oh, the market's going to collapse. If there are actually signs of it happening, then yeah, do what you got to do, make the adjustments that make sense for your portfolio, of course. The vast majority of instances, though, when people are trying to front run that massively, is nothing happens and they're actually missing out on pretty significant profit potential longer term by transacting more than they need to. So just something generally to avoid. It's something that will never go away. You're always going to hear that when the market is near highs, is a crash is coming. And it's just because it's sensationalized. Shriek says Lego is and have been making crazy money for years. A bit of our price range, if you ask me. Yeah, I doubt that Lego would go quietly because they're such an effective brand by themselves. I actually don't even know if it's in the price range. Like, I imagine Lego as a brand is worth a lot. What is Lego worth as a brand / company? That's got to be a lot. So revenue was 11 billion. Yeah, so that means like a reasonable ballpark for Lego is probably like 20 billion. That's what I would guess. If revenue is 11 bill, it's probably like $20 billion. That is pretty significant. Yeah. Hot Nitrogen says, have you spoken to Newton since he left YouTube? Is he well? If so, yeah, actually, he and I still text. I'll text him right now and tell him that you guys said hi. But yeah, he's doing great. He's doing a bunch of stuff around his house. He's spending a lot of time working on his garden, which is super fun. I just texted Newton for you guys. So yeah, no, he's doing awesome. Rami says, how much is Steam valued at? That's a good question. Steam is also super profitable. What is the current value of Steam? $7 billion? Yeah, so like 7 to 10 billion. Pretty significant. Yeah. All right, gang. That's all I got. The shelf registration allows GameStop to pivot quickly. The warrants still provide an interesting value factor. There's a baked in out via the inherent fact that there isn't enough for all of the existing shares, as we were talking about, in terms of any exercise from options. As soon as there's even a marginal exercise of options, there's not enough. So that creates a scenario that they already have accounted for. Very frequently, that's done through stuff like cash. The last thing is make sure that you guys do not get wrapped up when people are starting to get antsy near market highs. That will happen as long as we have markets. It's always the same thing. Do not listen. An outlier. See you guys later.